Hello everyone, welcome back to the channel. My name is Kei and I am a Japanese full-time trader. Today we're going to tackle one of the most dangerous areas in trading, support and the resistance breakouts. If you have been trading for many amount of time, you know the pain already by now. You draw the perfect horizontal resistance line, the price finally breaks above it, you feel the excitement, you click buy to catch the big move, and then, almost instantly, the market reverses and stops you out and leaves you trapped. And Western trading gurus will tell you to attack these levels. They use aggressive words like smashing the resistance or beating the market and so on. But as a Japanese trader who has studied the deep original text of Ichimoku Jissen, I'm here to tell you that this mindset is exactly why most traders lose. You cannot beat the market. You cannot force a level to break. You must apply the concept surrender to the market. So you must apply the concept surrender to the market, and because the market is like a river, if there is a boulder in the way, the water does not fight it, it flows around it. So to become a true non-losing trader, you must trade with mushin, which means no mind. You must look at the chart with zero greed for profits and zero fear of loss. You only enter when the market's equilibrium is perfectly clear. Today, I'm not going to show you this theory on the dead chart. We're going to jump into the Forex test online and I will show you how to use Ichimoku to filter out the fake breakouts. And more importantly, I'm going to run the simulator to prove you to how this strategy preserves your capital over time in the long run. Forex Tester is actually running a massive sale right now, and the discount code I have for you is actually available. It's in the description. This is actually the cheapest price you can see until Black Friday, but I will talk about it more later. First, let's learn how to survive the markets. Alright, we are inside the Forex Tester online, and I have the simulator post. And please look at this chart. Let me draw one line over here like this way. And any retail trader in the world can see this resistance level. It's obvious because there was previous resistances around this area over here. And the market is actually reaching towards that level now. And now let's look at what Ichimoku Jissen is telling us about this exact same level. So let me pop up Ichimoku right now, and it looks like this. Okay, so right now the price is testing the horizontal line, but please look at where we are in relation to the Kumo, the cloud. The market is locating exactly inside of a very thick Kumo. In the original Ichimoku teachings, the Kumo represents turbulence. It's a thick zone of historical indecision. If you buy a breakout while the price is fighting in the cloud or Kumo, you are fighting turbulence. And you are not flowing with the river, rather you are trying to swim upstream. And this is where Ichimoku gets really precise if you understand fully. I did talk about the Chikou span breakout, and when you see this market, you have maybe noticed already that there is a Chikou span breakout. So you may want to think to buy, however, you don't want to because again, the market is within the thick part of the Kumo and it's near the previous resistance. So even the Kumo twisted bullish here, this breakout can be fake. Even if the market closes above the resistance like this way, if it's still within the Kumo, then it becomes fake. So in this case, you don't want to expect the price to break the Kumo. Rather, you better wait for the clear breakout, which means you better wait for the closure of the candlestick above the Kumo to buy. Now, let me run the candlesticks one by one to see exactly how it's going to happen. So let me zoom in the market so that you can see the candlesticks more clearly. Maybe like this way. Okay, so now let me just move one by one. Next bar becomes the doji, still within the Kumo. So that means it's still risky to enter the market. And what about the next one? Next one becomes still inside. So usually when the market is within the Kumo like this, the market can be really random. It's within the turbulence, so it's better to stay away. Next bar becomes also pin bar. Next one becomes a bullish bar, and it seems like it broke the previous resistance level, precisely on 212.27232. The market did close above the resistance level, but it didn't close above the Kumo, and this is still within the Kumo. So you cannot trust this breakout over here. And the next bar becomes bearish, so it seems like it's still ranging within the Kumo. And the next bar became bearish. Actually, it actually started from here and went above like this way. So anyways, still within the Kumo, and it's risky to trade. And the next bar is finally out of the Kumo, but still it's in sideways, still being below the resistance level. It's still risky to enter the market. The future Kumo is already turned bullish, so if the breakout happens, then we can expect the price to go up like this way. But until we confirm, we cannot place order. And the next bar became bearish, and the market is back within the Kumo. So this is the clear sign that the market is continuously range. So again, the market was near the previous resistance level, and that was within the Kumo. And this oftentimes happens when the conditions like this. So what do we have to look for is the question. We only trust the resistance breakout when three conditions are met in perfect harmony. Number one, the price breaks the resistance level. Number two, the price is completely clear and above the Kumo. The turbulence should be beneath us. And number three, the price is above the Kijun Sen. When this higher time frame alignment happens, you can enter buy, but you can also zoom into the 5-minute chart to find the absolute precision. Now let's run the Forex tester online to find the exact situation. I want you to watch what happens when amateur traders buy without Ichimoku alignment. I just realized that we couldn't see the number on the right side on the screen, so I have adjusted the frame. Sorry for the inconvenience. So now let me run the tester bar one by one and see how the market goes. All right, next bar still ranging. This is slightly bullish. The price is above the Tenkan Sen, so seems like it's going up, but we're not still sure yet. So it's a bit risky to still enter the market. And seems like this resistance level is already strong. So it's safer to wait for the breakout. So let me forward a few more bars. Okay, so this indicates that this is the market broke the resistance level clearly. And we have the price is above the Tenkan Sen and Kijun Sen, and the Kumo is actually bullish, sloping up, and the Chikou span above the candlesticks. Chikou span can be within the Kumo. As long as it's above the candlesticks, it's bullish. So this is the perfect and clear breakout. But so you may wonder if you can enter buy now. And my suggestion is to check the 5-minute time frame condition from here. And when you see this breakout, you may enter the market now, which is okay. But my suggestion today is to check the 5-minute time frame. And there are multiple reasons why I do this. Number one is that if you place a stop loss over here, if you enter buy now and put the stop loss, let's say below Tenkan-sen or below Kumo Kijun-sen or below the swing low, then the stop loss will be very wide. If you put the stop loss, let's say below the Tenkan-sen, then it becomes 38 pips of stop loss, which is okay. But I know there is a better way to place a stop loss, smaller stop loss. If you place a stop loss below the Kijun-sen, then it becomes 62 pips. If it's below the swing low, then it becomes 71 pips of stop loss. So I prefer not to place the bigger stop loss because the reason is that the market may be retracing or ranging, and if the market goes all the way down, let's say to 71 pips of stop loss, you never know how long you have to wait. It may take hours or it may take few days until the market goes back to stop loss, and you may not be able to enter other markets. So this is one of the reasons why I don't do this bigger stop loss. And another reason is that the risk can be wide, risk can be bigger. So time efficiency wise and risk wise, I prefer not to place a stop loss bigger. And another reason why I don't enter the market based on 1 hour only is because the market may retrace from here. And to confirm whether the market retraces from here or not, I check the 5-minute time frame. I do so based on Sakata Goho, which is the original Japanese candlestick patterns. Now, you may be new to my YouTube channel or Ichimoku or the candlestick patterns. If you're new and if you are not sure which Sakata Goho patterns are there, you can come to my website over here and come to knowledge and click on Sakata Goho. Then I have shared some simple basic patterns. So there is Sanzan, and Sansen is here. And also there is Sanku. Sanku is more effective in stock markets where the gaps between the candlesticks. But Sanku is actually one of the Sakata Goho, and Sanpei, and also Sanpo. So whenever I see one of these patterns, these can be one of my entry confirmations on the 5-minute time frame. So now the market broke the resistance. Again, you can enter buy, but when you see the reverse pattern in one of the Sakata Goho patterns on the 5-minute time frames, then the market may reverse, it may retrace, and you may lose. And this is another reason why I want to check the 5-minute time frame to make sure that the market is aligned, that direction is aligned with higher Ichimoku direction. So I go to the 5-minute time frame, and just to avoid the confusion, let me hide the Ichimoku, because on the 5-minute I don't usually use Ichimoku. So here we have the candlesticks only, and so okay, previously there was actually this is Ichimoku P wave, and the P wave has broken bullish here. So this was actually one of the entry patterns, but the price was still below the previous resistance. So I would say it was rather risky to enter the market. And here actually there was a breakout of the resistance on the 5-minute. And before the breakout, there were doji and inside. So this is nice. This was one of the entry opportunities by Sakata Goho. But let's say if you miss it, and when you open the market, you are here, then let me show you practically what you can look for. Now, let me zoom in the market. I can see some patterns now. Okay, maybe you can take a look at the moment and see what kind of candlestick patterns you see and what you expect to buy. Okay, let me pop up the website again. And I can see that there is a sample. Sample means simply inside or outside breakout. And there are actually 3 candlesticks in between, but it can be 4, it can be 5. But if the previous candlestick high and low includes the future candlesticks and breaks, that's simply sample. And that's what I called inside bar breakout. So here on the 5-minute time frame, you can see inside, I think clearly over here. Okay, so this is the 5-minute time frame. And what we saw before with Ichimoku was 1 hour. So 1 hour broke the resistance and 5-minute chart looks like this. So maybe you know what to do now. You wait for the breakout of this sample or the inside, then buy. In this way, the stop loss can be very tight. You can put the stop loss either here below the inside so that if the market goes down and goes against you and if it reverse, you simply exit. Or you can place the stop loss below here or here to have more buffer so that you manually monitor the market, and if it breaks here, you exit manually. That's also okay. But chances are, so now we have 1 hour bullish and breakout. You enter the market without checking this 5-minute time frame, and chances are what may happen is also that the market breaks the inside bar bearish. Okay, and if this happens, this works as a typical trend reverse pattern. So if this happens, the market may retrace to the 1 hour Tenkan-sen or Kijun-sen, and you may lose. And this is why I don't jump into the market at the time of the breakout. And this applies to the Chikou span breakout or the Kumo breakout or Tenkan-sen, Kijun-sen bounces. I always check the 5-minute time frame and make sure the 5 is also aligned with higher time frame Ichimoku confirmations. So this is the exact topic for today's video. You may already know that the trend starts from the lower time frames, but they follow higher time frame directions. So we have 1 hour breakout of the resistance, and let me show you 1 hour again just to remind you, because this is a really important topic to cover. We have the Kumo breakout over here. We have the resistance breakout over here. We have Chikou span above the candles, and Kumo is already bullish. So you may enter the market now, but because this is basically trend is happening, and most likely the market goes bullish. But as I mentioned, the trend starts from the lower time frame is also true. So that means if you see some kind of trigger of the trend reverse in the lower time frames, then you better not to enter the market, or you better wait until the trend reverse situation is invalidated in lower time frames. And to do that, you check the 5-minute time frame. And now you see a potential trend reverse pattern over here. If it does, you don't trade. If the market goes towards the major direction, then you do. So that's the mindset of how you check the markets in multiple time frames to avoid the fake breakout. Now let's move the bars one by one on this 5-minute time frame and see if the market breaks the inside bullish or not. Okay, still inside. And then the next bar clearly broke the inside. So this is exactly where we enter the market. So because we filtered the turbulence in 1 hour, we can have a very tight stop loss on the 5-minute chart. So this time we put the stop loss below the inside and see how it goes. Okay, let me go to new order now and place a buy. And this time I want to take 2% risk to the stop loss. And the stop loss will be placed below the inside, which is over here. So this is going to be 180 points. That means 18 pips of a stop loss, which is not bad. And for the take profit, I want to take 1 to 3 risk reward. So I'm first, let me just risk 2% to the stop loss. This is the risk amount to the stop loss. If the market goes against me and hit the stop loss, I will lose 2% of the capital. So 2% for the stop loss risk, and the reward should be 6%. And that will give me 1 to 3 risk and the reward ratio. And now I place buy order, and let's see how it goes. So let me see. First, the market is still, looks like it's a bit ranging. Okay, next bar broke the previous bar. So this is trending nicely. So you see how the inside bar breakout works really nicely. So let me see. Okay, next one became a bigger bar. And let's see. Okay, now the market is consolidating. But I keep holding the market. Let's see. Here we have another pin bar. We have a small body and long wick is called a pin bar. And here's another pin bar. So that means if the market breaks the new resistance over here, then the trend will continue most likely. I mean, nothing is 100%. It may become a fake breakout. In that case, I will simply exit somewhere. But for now, looks like this is trending towards our direction. So I will still keep holding the trade. And let's see if it breaks the pin bar bullish. Another pin bar, 3 pin bars, okay. Looks like there is a support level quite strong over here. We have 3 wicks pointing down. So this showing strong support. So I think the market breaks bullish this way, but we will see. Yep, it did break the resistance. And this is nice. So TP is over here. We have 54 pips of, target. So let's see. It's almost reaching over there. Okay, here is another inside bar happening. So if it breaks, I think most likely the market breaks the resistance and goes towards the TP. But let's see. Okay, yeah, it did break the doji and inside. So I think the market reaches TP almost. We have only a few pips away. Okay, now it's almost reaching. Okay, now it has reached the TP, like this. Okay, great. So the market pushed perfectly into our take profit. So in this way, no stress, no panic, just following with the market's natural equilibrium. Now, let me share why I'm using the Forex Tester online for many years to teach you the strategy and why it's the ultimate tool for mastering your trading psychology. When you are in a live trade, for example, your heart rate may go up and you want to close early to take tiny profits, or you move your stop losses because you are afraid to lose. And this is actually the opposite from Mushin, no mind. And to truly practice no mind, you must use the fixed stop loss and fixed take profit levels. And setting fixed levels and walking away completely alleviates emotional pressure. But the question is, how do you know which fixed levels to use? And that is where FTO's exit optimizer comes in. So now let me show you how it looks like you click on Analytics and scroll down, and you can find here Exit Optimizer. So when you run your backtest, this Exit Optimizer analyzes all your trades and mathematically shows you the exact stop loss and take profit distances that yield the highest profitability of your specific strategy. Some traders argue that fixed stop losses and take profits might skew backtesting results slightly compared to actively managing every single candlestick manually. And mathematically that might be true, but how about your psychology? Fixed levels are vastly superior. They train your brain to accept the outcome before the trade even begins. You place a trade, you accept the risk, and you surrender to the results. Combined with FTO's deeply detailed analytics dashboard, you stop guessing. You get objective and mathematical proof that your Ichimoku strategy works. And when you have mathematical proof, fear disappears. And based on my own experience, that's how you become a non-losing trader. You cannot achieve this level of peace in your trading by just watching YouTube videos. You have to put in hours on practice, and my best advice is with the simulator. If there is no Forex tester, I would not have been confident on my strategy because I have the stats that prove I am winning over time, and I'm simply applying the rules in live markets, and I get the result every once and every year. So if you are serious about this, right now is the best time to get your hands on the Forex Tester online because they are currently running a major promotion. And as I mentioned earlier, you will not be able to purchase this software at the cheaper price until Black Friday. In fact, it's likely that even Black Friday won't have prices like this low. So please check the description and get the purchase link and the coupon code only for this time. And also, I hope you enjoyed today's video, how to avoid the fake breakout from perspectives of Ichimoku philosophy and Japanese candlesticks psychology as well. And I hope to see you again soon. So till then, stay healthy, stay safe, and stay gold. Mata ne. Bye for now.